Monday, June 22nd, 1:17 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. This Monday afternoon, going to go over the stock index called the S&P 500. Just like it says, it has 500 companies in it. We're doing top down. Top down includes multiple time frames. Show you some ideas for swing trades, day trades, investing. Each of these are different time frames they can be conducted in. As well as the S&P 500, it trades on the stock market. It trades in the futures market. It trades on the options market and the futures in the stock market. Yep, there's different financial markets you could trade it, different hours, different margin requirements. It's a good stock index, solid stock index, until things change. But if you notice, I said it's 500 companies. 500 publicly traded companies. That's right. Publicly traded means you could buy a fraction of the company. You open up a brokerage account. You fund it with money, and you could buy the stock. Stock index here, this is a chart. This is a candlestick chart. This is 20 years of history of data prices. Each candle represents a month. See the bottom left? That's the low of 2009. And the top right, that's the all-time new high made this month, 2026. Yep. It's a bull market. It has retracements. But again, the markets fluctuate in prices. They go up and down. So when you make a purchase, you might be buying at the top. You might be pulling back after that. Maybe you're scratching your head wondering what you did wrong. So how does this market keep going higher? Well, the company that manages the stock index, periodically, they change out the companies in there. They change out the companies that are poor performers and put it with better performers. What they're speculating will be continuing better performers. And that helps the index continue making highs. That's methodology is done with the other stock indexes too. Again, the S&P 500 is very broad. It has 11 sectors. That's wonderful. It's not all heavily weighted towards, or it's not a stock index that's just one sector. It's not a stock index that's just one category. So good times and bad times, this stock index will have better run-ups and faster sell-offs. I'll give you an example. Again, this stock index comprises of financials, banks, insurance companies, mortgage companies, brokerage companies. Well, during the mortgage meltdown, that was part of the real estate bubble, then that had a big negative impact in the S&P 500. The dot-com tech companies, when that bubble popped, that had a big hit, downside, hurting the stock index. But again, the stock index is very broad. I told you, it's 11 sectors. So currently, higher high, higher low from the prior candle. Currently, the candle for the month is red. That means it's lower than the price it opened at. Again, the month is not done yet. Huge wick. See this big wick? Some people call it shadow. Some call it a tail. It's done a huge retracement of the prior candle. And again, I told you, then it broke out, made a new high. Nice. So again, this time frame, the trend is up. But again, pay attention. It's currently red back inside the prior week. That's concerning. Now we're looking at a 5-year chart. Each candle represents a week. See these white words I have here? Some of them say distribution. Some say mark down. Some say accumulation. Some say markup. You may want to look at your dictionary and read up on the definition of each of those. But I will show you here on the charts. On the far left, distribution. See the prices here? They start to decline. And then we have further decline marked down. So you got it? Distribution is when the smart money is selling the stock and the price is declining for markdown. And then accumulation, smart money buying the stock, followed by markup, more buyers, into distribution, smart money selling, dumb money buying, markdown phase, markup phase. You can see this on multiple time frames, but I'm showing you that on the weekly example here, which is a good, solid example. So again, I say this because every trade, there needs to be a buyer and seller. So when you have distribution, somebody selling, you have dumb money buying. And it could occur for many, many weeks. Look at this right here. This occurred for several months until eventually there were less buyers. The market maker couldn't sell it at the price the smart money wanted to sell it. So they needed to mark down the price. And then somebody thought it was a value down here and started to buy. Again, more people thought it started to be value and had a markup phase. So here's the low of this year. Here's the high of the year. Last week was the high of the year. Now the current week, we're just in one day, Monday. Yellow candle simply means didn't take out the high low of the prior candle. Well, before last week's all-time high, we had that red candle. That was the all-time high. And then it had that huge sell-off, followed by that next week, lower high, lower low, continuous selling off. And then the reversal. Reversal formed this candle here. It's nearly a dodgy candle. Dodgy candle often means indecision, potential reversal, potential halfway point, depending where it is. Well, here, again, that big red candle sell-off, massive sell-off, very bearish candle. You had retracement on weakness, big wicks on the top. Didn't sustain up there. Where last week, again, it made that new high, but then it went back inside the range of that red candle. Maybe distribution. And currently here, inside candle. So I have it labeled as a red zone, smart money. Again, supply zone. I'm concerned it might be coming a distribution phase. Now we'll dissect it further into a daily candle. It's orange lines right there. Well, what happened was it had a gap up that day there. I recall that was Sunday, about a week ago, when the President of the United States announced a agreement with Iran. Since that agreement, it has reversed. Yeah. Who's surprised? Okay. So that period of time, when it gapped up that Sunday night, it made that new time all-time high. But then that next day, it made that inside candle. Again, yellow candle, indecision, and it went lower. The gap did not get completely filled yet. Nope. Actually, let me remove this. Yep. So the gap's not completely filled yet. But notice this. This huge gray box I have here, it's been in this range. It went up, did a pullback, went back up, making a new time high. It's been here for a good amount of time. Notice these big red candles are almost solid red bodies. And then we have the retracements that continue going higher, but the retracement candles are smaller. And then here again, here we have this consolidation occurring, which again, my concern is it might be distribution phase. So many places it could go down to on the downside. The duration for either way could be short-term or long-term. So taking this to the intraday now, taking it to the cash index. So this is the S&P 500. cash index. Cash index, they trade from 9:30 a.m. to 4 p.m. What I was just showing you before on this chart, we see this is ES. That's the futures market. That's one of the futures market. One of the futures markets have a forward slash. This happens to be in the futures market called the CME group. Trades nearly 24 hours a day, nearly 7 days a week. Where the cash market trades Monday through Friday, 9:30 a.m. to 4 p.m. Yep. And these white vertical lines are representing the two most current recent FOMC meetings. If you don't know what that means, that's the United States Central Bank, also known as the Federal Reserve. Those two times had different leaderships, both appointed by the same president, both approved by the Congress committee, and both times those cabinet members, those FOMC meetings, again, they're a committee. There's several people. They each voted, and the majority voted to leave interest rates unloan. You got it? There were two different leaderships in charge of those committees, both appointed by the same president, both approved by the committee of the Congress. They are independent. They both decided to leave rates unchanged. All-time high, yellow horizontal line. Look at this gap down here. Has not even been tested. This gap here was not even filled yet. And neither one filled. So potential targets on the downside. And that day, the Federal Reserve, huge red candle, huge sell-off. Since then, we're in a consolidation phase. You have that all-time high here, up on weakness. So if you're bullish, one could be looking to buy on the dips on these downsides. Now we're on the intraday chart, 30 days, 4 hours. Some key levels I have here. My red are supply zones where sellers have come in, and the green is demand zone where buyers have come in the past. And when the prices go into these, I already have a mindset of being bullish or bearish based on historical data, as well as candlesticks. Yep. Well, this morning, this is red candle here. That's a 4-hour candle. That got done at 1 p.m. this afternoon. It went up and tested the supply zone, rejected it. So again, that's a 4-hour candle. That was from 9 a.m. to 1 p.m. We've already done a half an hour, and this is the new one. So key level, distribution, smart money selling. Yep. One hour, 30-minute, 15-minute. So now, this is the 4-hour chart. One day. This is all today. All this today. But the drawing is based on that 4-hour. So you have the overnight lows running up again, extended hours from the Asian session to the London session. They ran it up, broke my blue horizontal line. Look at these huge price actions, big candles. That's a lot of price ranges. Went up, luring new buyers in, dumb money buying. Went in here. And notice that red candle. That was the high. Smaller trading range. I'll zoom in. There we go. So that red candle was the high of the day. Small trading range. After that inside candle, higher high, higher low. And then it reversed. On the next candle, reversed. The next candle made a lower high, lower low. So see this green line I have underneath it? It says 15-minute. I'll zoom in. So one methodology of taking day trades is just like I'm showing you. Higher time frames. I set up my supply zones, demand zones, and some other levels. Watch it on a intraday time frame for a potential reversal. This happened to be a 15-minute one. And again, this red candle, big red candle here, the second red candle, was the reversal. Lower high, lower low. But again, it occurred at the bottom of that first red candle. If you want to see, also notice down here, see this swing low? It went there. I could put a line there too. Oh, forget about the line anyway. That's low. Went there, broke it, and buyer stepped in here. So again, now it's mixed in accumulation distribution phase, mixed in potential target on the downside. So that 15-minute candle, though, that low, that green, take it to a 5-minute, and I'll zoom in again. Now on the 5-minute, zoom in some more. And let's zoom in some more. There you go. That low of that red candle. Again, that red candle was the end of the 15 minutes. So these first 3 candles, this red, green, and red, those make up the 15-minute candle here. Now back on the 5-minute, right there, those 3 candles make up the 15-minute. In the bottom of that red candle, I have that line. Broke below it, tagged in. See, this is tagged in? Yep. Short entry. And what happened? Short, the prices went lower, 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 lower. Ride the trend. Short. Till the trend reverses is one way to decide to get out. Well, here we have an inside candle, indecision. The stop could be moved in, down, here. And then the next candle made a lower low, lower high. Move the stop down further. And here there's what would stop you out. So tagged in, stopped out. Bear short, profit. Just example of multiple time frames. Less whipsaw too, using these first, the 30 seconds, 60 seconds. But again, absolutely, there are trades on multiple time frames. This is just one strategy showing you candlestick charting, multiple time frames, good money management, 0 studies, explaining investing, explaining day trading, swing trading. Thank you as always, spending just a little time with me. That's it for the video. Thank you kindly for watching.